Good morning, everybody. Hey, welcome to Wednesday. It is August 9th. Hope your week's been going well so far. Yesterday was, kind of a down day yesterday, but today it looks like maybe we could bounce back up. It's been a really seesaw week for sure. Join us here. Stay with us as we get ready to talk to Dave here in just a second. Before we do that, though, let's not forget that there are a lot of things out there that you and I, we cannot control. However, you have an opportunity to take control of your retirement assets by knowing how much risk you have in your portfolio and knowing how much risk you should have in your portfolio based on how long you have until you get ready to retire. Give us a call because that's exactly why I developed the core retirement design. Give us a call at 863-382-0037. Hey, with that, got Dave coming up next.
Leaving you for
105.7 Light FM. Woo, that's Adele there. I am Morning Dave. I'm glad you're here. We're at 8:40 now. It's 20 before 9. Let's check in on money and see what Wall Street's doing this morning. It looks a little bit calmer today than it did yesterday. See if it really is that way. Check in with Phillip Statler from Statler Financial Services, who is on the phone this morning. Phillip, good morning. How are you?
Hey, good morning, Dave. Hey, doing well today. It is halfway through the week. Yesterday, not such a great day on Wall Street, but man, it has been a seesaw time in the marketplace with ups and downs. It seems like every other day.
Oh, yeah, the VIX is looking considerably more normal right now for what we got used to. Yesterday, the Dow fell 159, S&P was down by 19, NASDAQ fell 110 points. That was over 0.75%, and the Russell 2000 went down by a little over 0.5%. It was a real red day on Wall Street, and a lot of it, our read on it was, much as anything, it was just kind of a panic when Moody's downgraded all of those big bank stocks. And, it probably wouldn't have been half as severe if we didn't have a case of the touchies after all of those regional banks got in trouble a few months ago, right?
Well, that's very well could be. But let's face it, Dave, when you look at the ending numbers for the close yesterday, they really, compared to what the intraday was, not too bad because the Dow was down over 400 points at one point yesterday.
Yeah, we definitely had a herky-jerky day yesterday. It kind of looked like a cereal bowl yesterday on the charts. We started out way down, dipped a little bit more, and then finally recovered to the point where it was a dignified loss at the end of the day, but still it was a loss.
Absolutely. Yep, you're right.
So then we come up with this morning, and you and I were giggling about this too. Wells Fargo isn't the only one, but they're kind of the poster child for banks that screw up. Wall Street firms and banks got fined $549 million yesterday because Wells Fargo and a bunch of other Wall Street firms got caught using things like WhatsApp, Signal, and a bunch of social networking thing off bankers' individual personal cell phones to communicate with customers. That's a big no-no according to record-keeping rules on Wall Street, and that means they ended up getting fined again. Poor Wells Fargo, they just can't seem to keep their nose clean to save their necks, can they?
It sure doesn't seem like it. I mean, it's like they got a target, I guess, maybe on their back somewhere.
And okay, fine. I mean, I don't have enough going on really to make my banker want to WhatsApp me and send me a note saying something. But yeah, it always struck me as kind of backdoor. I mean, but all the paranoia we have about insider trading and the like, everything needs to be kept above the board. I can't say my broker has ever texted me anything except a reminder when I've got an appointment with her. But still, it seems like relatively small potatoes. But $549 million of the fines, that kind of makes the potatoes a little bit more mashed, doesn't it?
Oh, man, I tell you, that's at least, hey, they can always write that check, right? I mean, they got all the money in the bank, right?
Somebody else's money, though. Talking about somebody else's money, we got a consumer credit reading yesterday after you and I were off the air, and it's kind of a benchmark all of a sudden. Consumer credit card balances topped $1 trillion last month, up $45 billion, or about 4.6%. We're just burning plastic like it's going out of style.
Well, that's kind of what you and I have been talking about, right? That's what's keeping the retail numbers going. That's what's keeping everybody being able to spend what they're spending with inflation the way it is. And so, but at some point that's going to come home to roost, and it's going to be painful.
Oh yeah, overall household debt now. This includes all the the car loans, home loans, and the like. It spiked by $2.9 trillion since the end of 2019, right before the pandemic hit. The only thing that has any level whatsoever of reassurance that that's not almost an Armageddon level number was that M2 money supply chart that I was sharing yesterday, that we actually have more in our deposit savings and checking accounts and relatively liquid accounts in the banks than we would be normally projected to have as well. Thank you to the government for all those cough up stimulus checks that we got. A lot of them went into savings, but we aren't spending them, which I think is probably the most telling consumer confidence number you can do. We're still saving, but we're borrowing the snot out of our credit cards.
Yeah, that doesn't quite make sense, does it? But it's the difference between the people that have and the people that don't.
Yeah, makes a difference. The data dump this morning, about the only thing that came out this morning was the mortgage applications count. Last week, they were off by another 3.1%. Kind of reflected by the fact that the average 30-year fixed mortgage price in the country right now, 7.09%. Sitting there saying, okay, I refinanced at 2.9 about a year and a half, 2 years ago, and I'm starting to feel like a rocket scientist right now.
Yeah, and that's a pretty huge jump. I mean, and that's for somebody, that has probably decent credit, that's applying for that loan. I mean, the FHA loan rate is 7.02%. And that's the folks that are first-time home buyers or lower income people. They don't have to put down as big a down payment. That's the highest since 2002 as far as FHA loan value.
Yeah, you start doing the math at 7% numbers and on a finance with the increased price in housing. I can feel the pain of anybody looking for a home for the first time, or needing to trade up or trade down or move right now. It's not a pleasant time to get a home mortgage, and if you need to, you're going to pay through the nose.
Yeah, and just to give some comparison to the year ago, the number that came out for last week is 27% lower than the same week last year.
No big surprise, but that's still precipitous. It's a relatively small data dump this morning out of the government. Tomorrow, you're going to have a big number at 8:30, though, because the consumer price index comes out. And I suspect, given all of the numbers that we've seen and the little bit more touchy nature of the market, that might be a pretty good-sized market mover tomorrow if it's a surprise.
You're absolutely right, because I mean, people are looking out to try to figure out, what direction are things going? If prices are going up, that's not going to be helpful. I noticed, and you may not have seen this, but there's an article about China actually in deflation right now.
Ooh.
Yeah, that caught me by surprise too.
Yeah, lowering prices always sounds good until you consider that it's really bad news for the economy when that starts happening and it's not in control.
Yeah, so they are in a period of deflation right now.
And with their declining exports number we got yesterday, there's some pressure downward on their prices as it is anyway.
Exactly. And basically I saw another article that was talking about how our imports have gone down. And so that's a telling sign of our economy as well, slowing down from purchasing overseas. Yeah,
understood. CPI, by the way, tomorrow is supposed to be, they're expecting it to basically hold steady at 4.8% on the core, and they're expecting it to be 3.3% on the overall, which means we're starting to get into the zip code that the Federal Reserve wants.
Yeah, that's true. But you know what? The overall, if it comes into that 3.3 expected, that'll actually be up over the last reading.
Yeah, I noticed that too. I was trying to put lipstick on a pig here somewhere, Phillip. It is still earnings season, and we're looking at a whole bunch of stocks that people have heard of reporting. A couple of them after the close today. You're going to have some big ones tomorrow, but one that you and I have talked about suddenly is coming back to life. They're going to actually come back with, maybe we'll have car vending machines again coming back. How did Carvana do anyway?
Interesting. We just earlier this year, we were talking about the possibility that Carvana not being around much longer, but they actually came in and expected what they call EBITDA for the third quarter to be above $75 million. The expectation was it to only be about 46 million. So if they can pull that off in the third quarter, that'll be huge for them. You know, a lot of it has to do with that debt restructuring deal that they were able to do. And that kind of hurt the short sellers that were really putting some pressure on Carvana. They're trading up today 7.5%.
Wow.
I mean, they're getting close to $50 a share again, Dave.
And, given what we're reading about, auto sales and whatnot, when I look at it, I mean, auto sales haven't exactly recovered to pre-pandemic numbers. That's a good sign for them if they're actually being able to do business in the competitive market that's being created these days.
Yeah, and let's face it, car prices are still astronomical. And I mean, maybe if the car prices got back to where they were in 2019, the volume would go back to what it was in 2019.
Oh, I'm pretty sure that'll be the case, yeah. Or the interest rate to buy a car.
Exactly, yeah. So
other indications we got.
So we got some other stuff out there. Lyft came out. They reported second quarter revenue of a little over $1 billion, which was in line of expectations. They came in with earnings of 16 cents a share. They're actually expected to lose a penny a share. However, there was some information in their projections looking ahead that wasn't good. A slowdown in some of their stuff, and so they're actually trading down 5.3% this morning.
Okay. Any good news to speak of out there?
Well, I'm trying to find some, Dave. Some days it's hard.
Kind of ran out of the good news with Carvana, it sounds like.
Yeah, it's like there's, I got some non-earnings. This was interesting. It hit all the wires late yesterday or this morning, and that is Disney's ESPN has teamed up with Penn Entertainment, which is a gambling establishment, for a 10-year deal to create ESPN Bet, going into the betting business, right? So that Penn Entertainment is kind of benefiting from that, up almost, a little over 19% this morning.
That's good news for them. I still shrug my shoulders at the idea of sports betting being an entire industry unto itself, but then again, I'm old. We mentioned before we went on the air, and I forgot to mention this before we got into the reports itself, one of the companies that was kind of trendy for a while in the work-at-home era, WeWork, they're in some trouble. They're one of those basically rent-a-desk operations to give somebody working from home a permanent business address physically without having to support an entire office. That trend seems to be going downhill a little, at least in WeWork's world.
Yeah, at least in WeWork's case, they really are. They made a filing with the SEC, really reporting about their doubt about the company's ability to keep operating. Weaker than expected membership rates are hurting them. Potential bankruptcies coming up if they can't restructure and refinance some of their debt. They've been trading at below $1 now since earlier this year, and they are, I'm gonna say, a penny stock for sure. They're at 18 cents a share right now, down 16.5% from yesterday's close.
That's surprising, given the fact that sounded like an upward trend for a while with the work-at-home concept going on as much. One of those limited office space, get a physical address without having to hire staff and everything. I thought that would fight the trend against commercial real estate. That's surprising, isn't it?
Maybe people are going back to work, right? They're forcing people to go back to work. Maybe that has something to do with this.
It may very well. Resetting the table, it was an off day yesterday, ended up dignified off, but still off. How are we doing 45 minutes before the markets open this morning, Phillip?
Dave, we're giving way. They're all still green, but they've dropped substantially since I got to the office this morning. Right now, the Dow is up less. Well, let's just say it's even $12 up. Mm-hmm. S&P 500 is up $6, and the NASDAQ 100 is up $24. So nothing is up more than less than 0.2%. So not good there. We did just the Russell 2000 just went a touch red. On the other side of the coin, silver still falling, down another 0.4. Gold's down a little over 0.1%. And then the one I hate to see going up, Dave, especially now because I'm fixing to hit the road. Crude oil is up another 0.9% to $83.68, Dave. You know, I filled up the other day, yesterday, and I didn't hit $100 yet in the truck, but man, it's not going to take much for me to be at $100 a tank here pretty soon.
Oh, Lord. Yeah, I was whining earlier on the air when it tipped 84 a little earlier this morning. I was saying it cost me $40 to fill up my little four-banger Nissan yesterday, and I was saying, geez, I bought that car because it was going to be cheap to drive it.
That is cheap.
Everything being relative, it still is, but I don't like it. Overseas markets, we were mostly red at the close at 6 a.m. this morning in the Asian Rim. Mostly the Chinese mainland markets, the Taiwanese markets were down. Hong Kong actually did manage to gain a little bit at the close. No big movements either direction. Europe is actually looking at us this morning and saying, maybe we overreacted yesterday. They're trading evenly up in the 0.5% range, halfway through their trading day over on the European side of the pond. How do we get a hold of you, Phillip, to make retirement happen? A plan is necessary, and as weird as the days are these days, that plan is important.
It is important, Dave. They can give us a call at 863-382-0037. Go to our website at statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
All righty, and we'll look forward to you and Doug tomorrow morning, and I'll talk to you sometime a little down the road, all right?
All right, man. Have a great one.
Be well. Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hey, I'll be back here with you tomorrow. I hope you'll join me then. Until then, take care. Bye now.